Traders, loosen up! Bitcoin is printing one of the most misunderstood patterns of the entire month. Some traders are screaming, bear flag! Others are calling it an ascending trend. One is bearish, the other is bullish. Pick the wrong side, and you'll be losing your coolie on the next big move. And yes, I said coolie. Today, we're going to examine this pattern and also what's happening in Ethereum and map out the real levels that matter. Let's go! First question of the day. Judge, what is this pattern actually? If this was a clear bear flag, we'd want to see weak bounces, lower highs, and price drifting lazily lower. But look closer. The lows are rising. Each retrace gets bought a little earlier. We're squeezing between rising support and flat resistance. That's not a classic bear flag. That's an ascending squeeze. And squeezes don't resolve quietly. They break hard, higher or lower. So yeah, you could still be bearish here. Rah! But if you call this just a bear flag, you're ignoring half the story. But before we even touch the Ethereum charts, you need to understand what's happening behind the scenes. A whale just swapped 502.8 Bitcoin for 14,500 Ethereum. In total, they've now converted 1,969 Bitcoin, yeah baby, into 58,149 Ethereum. That's not just some random degen trade. That's a conviction rotation from Bitcoin into Ethereum. Ethereum is up 8% this month. Bitcoin, roughly 2%. And historically, every time Ethereum leads into December, altcoins follow. Alts lag. Then they catch fire. History doesn't whisper, it shouts! Japan is preparing a 20% tax cut on crypto. This is one of the biggest economies on earth, making it easier, not harder, for retail to participate. That kind of policy doesn't pump the market in one candle, but it builds the foundation for the next wave of demand. And then there's Visa. They've circled 2026 as the year of full tokenization and AI payments. Network tokens turning cards into an identity layer, and automated agents being able to pay on your behalf. Sounds like a great hacking opportunity to me. Great. When the biggest payment network in the world leans into tokens and AI, that's not just a side quest. That's a new main game and hacking opportunity. Yeah. Now, the chart that confirms all of that, BTC ETH. It just broke out of a big falling wedge. That's a classic reversal pattern if I've ever seen one. For months, Ethereum was quietly underperforming Bitcoin. Then, boom! Breakout, retest, and strength. When this chart turns up, it usually marks the start of an ETH-led phase, and eventually, a broader altcoin rotation. You know what they call that on X, right? Altcoin season! Hey, it's altcoin season! Hey, everyone, what altcoin are you going to buy? I'm going to buy Fartcoin because that guy James Seyfarth bought some. I like Fartcoin. Yeah, I'm going to buy that one. I like that one. Ethereum's own chart is just as clean. Price bounced from this green demand zone over here near the lows, and we're now forming higher lows into a compression pattern. You can see that here. It's very, very clear. Overhead, you've got this red supply block around the 3,500, 3,700 area. As long as Ethereum holds its higher low structure, this looks like a buildup before a potential test, and maybe a breakout of that red zone. Another key takeaway from this chart right here is new support forms from old resistance. This is a very common pattern, and the phenomenon behind that is the shorts that are caught in this situation are happy to cover, so it creates buying pressure in this area here, which now acts as a support. So this is very likely to form a failed low or double bottom, just like Bitcoin can if it decides to break a little lower. This is why it's so important to pay attention to the bigger picture and not get thrown off guard just because there looks to be a dramatic break, because that dramatic break on your smaller time frame, like a 30-minute or a 4-hour chart, is not that dramatic when you're looking at it on the bigger picture. Now, what if we do break lower? Check out this 3-day chart. See this red rectangle? That's the fear box. Not to be confused with other types of box, like the kind you can eat. Okay, I know people are like, what's he talking about? Well, check out Fresh and Fit, they'll explain. Anyway, this is a zone where retail poops its pants. Also, this is where you'll see all your frauds on your favorite social platforms getting extreme with their sentiment and saying things like, Bitcoin going to zero, Bitcoin going to 30K, right? That kind of thing. And this is also where long-term players quietly accumulate. I wonder why. So if Bitcoin revisits this area, it doesn't automatically mean that the bull cycle is over. It may just mean we are resetting sentiment just before the next major leg higher. And one thing I want to add to this is you have to look at markets like a institutional type of trader or investor. And one thing they understand very well is when markets look their worst, that's often where opportunity lurks. That is usually where your risk is the lowest. And since they have the resources and the deep pockets to do it, they can accumulate and basically buy from the retail who's getting shaken out. And they're giving away all of their coins or whatever to the what they call the smart money or the strong hand, right? So the opposite of that is when the market is pushing highs. Now, one thing I want to mention is, do you remember when Bitcoin was pushing 125, 126? Do you remember all the stuff that was on Twitter and all that other stuff as Michael Saylor was saying, right? How come none of these experts were saying at that time, well, Bitcoin is likely peaking here and we're likely to see 80K over the next few months? None of them were saying that. So that goes to show, right? You have to think like a contrarian. When things look their greatest, that's when risk is the highest. When things look their worst, that is usually when risk is much lower, relatively lower. So it really pays to wait for good levels and wait when these things go on. It's better to wait when these things go on sale. It's like going to a supermarket and getting like your favorite food for half the price, right? If you normally buy something that's $50 and it's on sale for $25, you're excited to buy it. You'll buy like 2 or 3. Oh yeah, I'm gonna stock up on these things. Well, you have to think of the financial markets the same way. So essentially, a situation like this points to a higher probability of going higher over the longer term, not lower. And when we zoom out to the weekly Ichimoku, hold on a minute, Ichimoku. Am I even pronouncing that word correctly? I don't even know. Is that how you say it? It sounds like someone you would meet at a Thai massage parlor. Imagine you walk in and you're like, well, what's your name, little girl? Ichimoku. Well, all right. I can't pronounce it, but let's get started. It's not like I know anything about Thailand, but I watch a lot of YouTube videos. Okay. All right. More on a more serious note, because we're doing serious technical analysis here. On the weekly Ichimoku chart, the structure is very clear. The price is dancing on top of the cloud's lower boundary. You can see that right here. Check that out, right? The red baseline underneath is the do not close below level. As long as weekly candles respect that zone, the macro uptrend is hurting, but still very much in play. It's messy, it's emotional, but what do you expect from a Thai massage parlor? Oh, wait a minute. I was talking about the legitimate ones, you guys. Get your mind out of the gutter, man. You guys are perverts. What's wrong with you? All right, no, but seriously, structurally, this still looks like a bull market correction, not a full-scale reversal, at least not yet. Also, I just want to say something about like an Ichimoku chart, because I know I have some people that follow me, and the first thing out of their mouth is going to be, since when do you follow an Ichimoku chart? And here's the thing. What we're doing on this channel is we're trying to expand horizons and provide a wide range of perspectives. And, to do that, you have to have an open mind. And even though I may not use this in my own personal analysis, it doesn't mean that it has no value, because it may offer perspective and it may give you a view that you never really considered. And that's having an open mind is a very, very important part of this game. So that's why, we're going to be looking at things that you may or may not use, but it's going to give you more knowledge. And more knowledge is a good thing in this business, because even though you may not be able to trade on that right now, or you may not be able to trade on this information specifically, it gives you perspective and can help you shape your expectations somewhat in the near future. Something like using wave counts, for example, or other techniques help give you a perspective, right? It gives you sort of a general roadmap. And then from there, that's where you refine your strategy from. All right, so you get the message. Now let's move on. Okay. By the way, if you enjoy this content and you would like to support the channel so that I can keep yelling at you, I put 2 links in the description, BTCC and WeX. Feel free to check them out to see if they're a good fit. No pressure, of course. So here's the big picture. Bitcoin's pattern is tightening between support and resistance. Some see a bear flag, others see an ascending trend. Ethereum is quietly taking the lead. Whales are rotating. Ethereum is outperforming Bitcoin. Japan is easing up on taxes. Visa is planning a tokenized AI-powered future. The daily EMA line at the 87,700 level is your key inflection point. The fear box is your emotional test. And the weekly structure still points to a market that's correcting, not collapsing. Bullish or bearish, the goal isn't to be right on Twitter like your favorite frauds. It's to read the structure correctly and persevere long enough to see how this plays out. It's all about making more when you win than when you lose. It's that simple. Stay sharp, stay focused, and I'll see you in the next one.